Every day I read stories from people who say they can't achieve profitable trading. Many have been trading for a month, 2 months or even longer, but somehow can get good results. I also went through a similar period at the very beginning of my trading journey. No matter what I did, my trading either broke even or ended in a loss. One idea helped me turn things around, and today I'll share it with you in this video. Sit back and pay attention. My name is Leah and this is all about trading. Let's get started! One of the most serious traps that almost all beginners fall into is complicated trading. We've been led to believe that traders are mathematically minded people with multiple monitors at their workstations. This is how they are depicted in movies and shows. As a result, a stereotype has developed that trading is very complex and that you must use some obscure indicator settings, intricate strategies, and sophisticated analytical methods. But that's not true. Now I know for sure that simplicity is the key to success. If you start learning trading with wave theory, Gantt squares, or Fibonacci numbers, you will definitely get disappointed. Imagine what would happen if you forced a first-year medical student to perform brain surgery. I wouldn't want such doctors to be allowed to work. It's the same in trading. If you start with complex things, you are bound to fail and lose your deposit. That's what happened to me, and it almost made me give up on trading. At the very beginning, I thought that to be a successful trader, I had to master wave analysis. I spent a lot of time on it, but only gained negative experience because it's a very complex strategy. Look at what a chart looks like for a trader who trades using wave theory. To learn this, you first need to read several books and mark thousands of waves and sub-waves on charts. Then you need to get used to working with this strategy, which takes at least a couple of months. Wave theory is a very cool and accurate method, but it's for those who have already proven themselves in trading. Consider it a level for PhD, that is for the most meticulous and professional traders. I didn't leave trading because a great idea came to me. What if I simplify trading as much as possible? And it worked! For example, instead of wave theory, I found an excellent alternative, the retest pattern. This is when the price breaks through a level, then returns to it and bounces off. A very simple strategy that resembles working with Elliott waves. At the same time, the pattern gives a very high percentage of profitable trades. The main secret of why simple strategy works is discipline and proper risk management, but we will talk about that a bit later. For now, please like this video and subscribe to the channel if you want more interesting and useful videos. Another principle that will help increase trading profitably is what I call less is more. This doesn't refer to the size of the profit, but to the number of assets. When a person first enters the market, they are overwhelmed by the choice of trading instruments. They can trade stocks, futures, indices, commodities, currencies. If they choose to work with currencies, their troubles are not over, and broker can offer about 50 currency pairs, and each currency pair behaves differently with its own unique chart. A huge mistake is trading everything indiscriminately. If you are a beginner, you should choose 2 to 5 currency pairs composed of currencies from countries with very strong economies. For example, the US dollar with the euro, the pound, the Australian dollar, or Japanese yen. The chart of these currencies are relatively predictable, moving smoothly with reasonable pullbacks. For instance, here is a chart of the most popular currency pair among traders, the euro to the US dollar. The price forms smooth waves, only occasionally jerking on news. Trading such an instrument is pleasant, and this is unpopular currency pair, the Japanese yen to the Indian rupee. The price movement is awful, because the Indian currency is only popular in its own country and is heavily tied not to international settlements, but to the ambitions of the central bank. You can buy rupees outside India, but you can only sell them in Indian bank within the country. Nowhere else will buy them. That's why the chart is so jerky, as if it trades in fits and starts. You can subscribe to my Telegram channel via the link in the description and check out the trade analysis, where you'll see which currency pairs I trade most often. These are the ones you can safely choose for any strategy. By the way, you can also find strategies where Now let's take a look at how I make money using very simple strategies. I'll give you a couple of examples with different types of signals. My favorite strategy is trading of the moving average. Here I enter a buy trade and I'll explain why. On the chart you see an uptrend indicated by the 30-period moving average. The signal in this case is when the price touches the indicator from above, like here. This situation suggests that the price is likely to rise soon. As you can see, there is nothing simpler. The main rule in the strategy is to only enter trades in the direction of the trend. If the moving average is pointed upwards and the price touches it from above, you should buy. If the indicator is pointing downwards and the price touches it from below, it's a signal to sell. In this trade, the price is increased significantly and the option closed with a profit. Now let's try the second strategy with another one of my favorite indicators, the RSI. Here I open a sell option because I see the falling on the RSI indicator. The line is falling from the upper part while the price on the chart is showing active growth. The situation is called a bearish divergence, indicating that the price is likely to fall soon. Divergence is considered the strongest signal in technical analysis. It's very useful to study this topic. In short, divergence occurs the RSI indicator line moves in one direction while the chart moves in the opposite direction. Trades during divergence are opened in the direction of the indicator. In this case, I also made a profit. Simple, quick, and satisfying. You see how you can make good money in minutes using this simple strategy. But to consistently profit from any strategy, I use various hacks, additions that help enhance my trading. Now I'll give you the top 3 hacks that I recommend using from my very first days of trading. First, always follow news. It's important to understand what's happening in the world. What economic data is being released in different countries. This way you'll understand why a currency pair's price moves a certain way. The chart will become more than just a collection of colorful Japanese candlesticks. You'll see what events are causing the quotes to rise or fall. The second tip, use simple indicators. This can be moving average, RSI, or volume oscillator. They are enough to trade profitably and without stress. There are hundreds or even thousands of indicators on the market. Many have very complex calculations and settings. We were invented to implement personal professional ideas. So don't complicate your work. Use what is simple and clear. Moving averages, for example, have been tested for decades and show results no worse than the most complex indicator. And the third tip that will definitely take your trading to the next level, a trade journal. Beginner trades often underestimate this point, but it's crucial. A trade journal is a personal document where you should record information after each trade. You don't have to do it in one paper. You can use an online spreadsheet. Just enter the currency pair name, date and time, result and reason for the trade. For example, the chart showed a divergence from a support level, so I opened a buy option. Here, why it's important. When the trading week ends, you can open your journal and look at the chart of a losing trades. You will definitely see what mistake you made in each of them. But the best part is that many losing trades will have a common mistake. If you spot and correct in your trading, your percentage of profitable trades will soar. That's why I highly recommend using this hack. Everything I talk about are technical aspects that can be resolved through training and practice. But trading has a second side, the psychological aspect. A person is not a robot, and during trading they experience a wide range of emotions. There is euphoria from a series of successful trades, fear of losing money, bitter regret about missed opportunities, anger from failures, and much more. Any strong emotion during trading can be fatal for your deposit. The trader loses concentration, their mind becomes clouded, and thoughts get confused. In short, you can trade in such a state. Once you fall into the trap of emotions during trading, consider that the market has won. Fighting emotions is the toughest battle you will face in trading. It's hard to stop a person who has given to some feeling. You can avoid emotional problems, but you must follow 2 rules. First, don't start trading if your emotions are running high. And second, If your emotions boil over during trading, immediately stop trading and redirect them to another activity. For example, take a bike ride for a couple of kilometers. And don't forget that having a trading schedule, keeping a trade journal, and a clear trading strategy will also help emotions manifest much less frequently. If you are ready to use everything I've mentioned, hit the like button and be sure to subscribe to this channel. That's all for today. Take these simple strategies and apply the hacks you've heard today, and you will definitely be able to become a good trader and make good money without stress and worries. I've been through all of this myself, and I can confidently say that trading can be very simple and profitable at the same time. I wish you success in applying these trading hacks and big profits in trading. Goodbye!